But when does this air? When can they watch the podcast?
This one will be maybe another month or two
Okay.
before it gets out because we've got quite a few in the queue.
Okay.
But I would say probably 6 weeks from now.
All right.
So you get the sneak peek early on.
That's good. So where did they find the podcast?
Any of the podcast platforms, just search my name.
Andrew Hines?
Andrew Hines, yeah.
The Andrew Hines. The Andrew Hines. All right. So we're going to let you guys get a little sneak peek here. Let me just set you guys up here. All right. Let me just tighten it up. I guess you can see both of us here. Nice.
Can you spell your last name?
Cuadra. C-U-A-D-R-A. C-U-A-D-R-A.
Quadra.
Yeah. How long have you been doing this?
3 years now.
3 years. All right.
Yeah, bring that up. It's a little low.
3 years. Longevity in the podcast game.
Yeah. Okay, so for this, basically between us,
Yeah.
kind of touching your chin.
Yeah.
Just like right there, yeah, just sort of in front. Yeah, that's great.
Good.
Okay, so I will get you focused in the camera here.
All right.
Yeah, they definitely.
Guys, you have to see the operation here. We got cameras. We got 1, 2, 3 cameras. We got lights. We got a laptop. So you know it's official.
Yeah. Yeah, this is the true behind the scenes look.
Yeah, the true behind the scenes.
Yeah. Okay, get this turned on.
We're about to Joe Rogan this.
Oh yeah, definitely. Okay, so we'll get this one recording.
Now, I didn't send you the 3 things, the 3 questions, but I'm sure you.
That's okay. Yeah.
You're a pro.
You know, I only glance at those anyway, so.
Nice. I'm sure that, I used to do live television, and, people send their questions beforehand,
Yeah.
and it's only when you get someone that is like one word answer, you like start thinking.
Yeah, no, I know. I like just a natural flow of the conversation, so.
Yeah.
The questions are just if, there was something that absolutely had to be covered.
But yeah. Well, you know what? It's better to get to know each other like this. Sure.
Okay, so we'll get it started. Okay, guys, you got to see all the part before I do this.
Yeah, this is before we went live, we actually had all the people here on set, so we had to let them go.
Yeah. All right. Hello and welcome to the Andrew Hines Real Estate Investing Podcast. I have Alfonso Quadra on the show, and I've heard your name a lot, seen your face quite a bit over the years, but we've never actually crossed paths directly. So thanks for making the trip down.
Hey Andrew, good to be here. It's like I seen your face too. I'm like, why don't I know this guy more?
Yeah. Well, you're here now. I think Peter Klosko set this up.
Yes.
And he mentioned that you should be on the show. So. If you wouldn't mind, give me the high-level view of what you do. I know you're a real estate investor, but tell me the story.
Yeah. So look, I'm a multifamily investor. Primarily, I've done everything in the game. 23 years in the game. Okay. So just like a lot of investors, we've done the SDUs, the RTOs, the flips. But what I really enjoy is multifamily apartment buildings. So over the past 23 years. I've been able to build a portfolio across Canada of 600 doors, and now we're actually set up to grow in scale in a very big way. We're investing not just in Canada, but we're also in the U.S. as well.
Yeah, what areas in the U.S. are you in?
So we're looking at Arizona, and we have something actually. I'm so surprised. We found something in Los Angeles. Right?
Wow. Wouldn't expect it.
Well, no one expects it, but we have something really nice there. 18 million apartment building. We're paying premium price, but those are the markets. As you know, it's 10 times bigger than Canada. But it's not like I'm saying goodbye to Canada. Mm-hmm. I'm just erasing that border, that line.
Yeah.
Right.
I'm big on the U.S. right now. I think that it's a great opportunity to diversify, especially a political hedge. You have another whole country that you can be invested in, and you know.
Do you invest in the U.S.?
Yeah,
Nice.
invest in U.S. investments. And
Yeah.
working on the investor visa as
Yeah.
well, and just kind of it creates some options and some flexibility. If I
Yeah.
want to shift gears and move down there, I can.
Yeah, well, you know what, like people, they, especially us in Ontario, we look, New Brunswick, we go Timbuktu, Saskatchewan, we go into Timbuktu, Alberta. But there's also this whole other market south of us
Yeah.
that no one's really exploring, right? And, that's exciting. It's a market that's 10 times the size of Canada. You have more inventory. And, depending when you go, so we're looking at Arizona, we're looking at Tennessee. I would have loved to been in Texas or Florida, but it looks like we're priced out right now. But
For
things
multifamily,
things are shifting.
There's not as much. There's not as much multifamily in Florida, like Tampa, yes, Miami, yes. Not south of that in terms of like the Gulf Coast.
Or the big, so we're looking for big portfolios,
Like you just want to buy out.
like
couple
300
units.
that's kind of the things that we're looking at.
Okay.
Yeah.
And are you syndicating these, or like how are you structuring them?
Yeah, all the above, right? So
Yeah.
sometimes they're partnerships, sometimes, when I was starting out in the industry, I was doing a lot of joint ventures, but now we're moving into GPLP structures, syndications.
And how do you go about raising money for those type of things? Obviously, there's a lot of securities challenges with that. Are you getting like an exempt market offering, or?
No. Basically, you get, that you have the Securities Commission. They're there. They actually have a purpose, and most people tend to be afraid. And there's a governing body that governs trading of securities, and I think they should be. I mean, because there's a lot of cowboys. Right? But at the end of the day, you follow the rules. For us, we just work with accredited investors, friends and family kind of thing, and that's about it. And we don't look for investors. We don't look for investors. We attract investors.
Yeah, so they're kind of finding you.
Yeah.
And I'm imagining you have like a private list that these people are on.
Yeah, exactly.
Yeah.
Exactly. And it's going to take time to build that. A lot of people want to go to that. I go and I teach a lot in a lot of the trainings that I do. Going from a regular investor to the investor. And when you become you enter the category of one.
Right.
Once you enter the category of one, when you're the Andrew Hines, you're not just Andrew Hines, you're the Andrew Hines.
Well, I picked that.
Well, you enter the category of one, people are coming to you, right? And when you're anything, a realtor, a mortgage broker, a plumber, you will always have to beg for the business.
Right.
When you become this is when people come to you, and then everything opens up.
So how would you structure one of these deals? Have you already closed on one for the States? Or?
Yeah. So just GPLP, right?
Okay.
Right now in the U.S., the challenge is there's a lot of people, trying to preserve their capital.
Like saving it for when things come down.
Well, we have inflation.
Yeah.
Right? We have the inflation factor.
Yeah.
Stock market's in the toilet. Crypto's in the toilet.
Mm-hmm.
And so people are running for real estate. And so you got to be competitive. And so, what we're structuring now is a situation where we can go in and buy these properties cash.
Okay.
Yeah.
So you've got basically the funds on hand ready to go.
Yeah. That's one of the strategies, right?
Through the GPLP strategy?
Yeah, through the GPLP structure.
Okay, so you're going in cash, you can obviously refinance the money back out.
Yeah, exactly. But then you have more time, right?
Yeah.
What happened? Everyone's in such a rush, especially when you're living. We're living through inflationary times right now.
Yeah.
And the name of the game is capital preservation, right?
Yeah.
If the money's sitting around, you're losing. I mean, the government said what, 8%?
Yeah.
I call BS.
Of course.
Do you believe it's 8%?
More like 20.
More like 20, yeah.
Yeah.
It feels like 50. But
Yeah,
more like 20.
I was saying 20 back when it was still like a debatable topic, and now you look at the key things you buy.
Yeah. Everything's double.
Yeah.
Right?
Gas. Yeah, gas is double alone, and that's a huge expense. If rents are up. I mean, of course, if real estate was in the basket of goods, that would have, it's what's not in the basket of goods with the consumer price index that skews the result. So the mandate of the government will be to control the inflation that they admit to. So we just have to keep that in mind.
Well, that's then when people see the interest rates going up, I think July 13th is
The next one, yeah.
Judgment Day. I'm not sure if this is going to be airing before that or
This will be after that, yeah. So we'll know.
So actually, no, it just happened.
Yeah, it just happened.
July 13th just happened, and they went up 0.75 basis points, and and there's a lot of opportunity. I see opportunity when these things happen.
100%. Like you'll hear the stories like more millionaires created in these times than any other, and it's about being positioned to take advantage. And I think it's a great time to have a fund or a private community of investors that are poised and ready to take advantage of opportunities when they come.
The next 5 years, Andrew, will be shown in history.
Yeah.
When we look back in history, the next 5 years will be the biggest wealth transfer in history in the next 5 years. Because if you see what's actually going to happen, what the government really needs, and the only way to fight inflation, which they created in the first place with printing all the money they printed, is actually a recession, right? And so, a lot of people are scared of the recession, but that actually will create more opportunity than ever in history.
Yeah, because when people are fearful, they're irrational.
Yeah.
And we've certainly seen that, right? So in times of that fear and panic, that's when the greatest deals come to be.
I'm ready.
And will they? I mean, who knows? Like there's mixed opinions, especially here in Canada, because we have such limited housing and a housing shortage. Do we see housing prices come down so much here? I think that it's going to be more of a area by area thing. Like there's going to be some areas that do, and then there's going to be others that don't as much.
In terms of real estate, I think you're right. In the housing market, it's going to be somewhat stable. We're going to enter a situation where people can't really afford a house. Things will sit around for a while. But I don't think prices are going to come down. What I do think there's going to be opportunities, like portfolios, people, like the baby boomers are now unfortunately dying, right? So they're leaving behind portfolios that maybe they didn't they transferred the wealth, but they didn't transfer the mindset to a lot of the young people. And they're going to be liquidating 10 cents on a dollar, mixed with a recession and people in scarcity. There's going to be a massive wealth transfer about to happen in the next 5 years. And by the way, no one has a crystal ball, so this is just my opinion. I think it's going to be this lever, up and down lever for a while, where they're just like, we're in a recession now. Let's reduce interest rates. And then it's like, now we're back. So I think it's going to be like an up and down more than what we've seen, where it's like we've seen inflation rate consistent for like over 20 years at 3%.
That they did too.
Exactly.
I don't really believe we ever had real economic growth after 2008. I think because the inflation adjusted rate would have shown that it wasn't actually real economic growth.
They printed money again.
They printed money back in 2008, and it took a while for the full impacts to be felt of what happened then. And now, of course, even more so. But I think that the competing forces, again, they're going to make it really tough to know where things shake out. Because traditionally, we have what you would call stagflation, right? It's undebatable. You can deduce that we're going to be in a recession once we have the two quarters of negative growth. So you could normally what they would want to do is lower interest rates to get things going. But when you have a recession paired with inflation, that's stagflation. And now, yes, like you said, lever on, lever off. What do we do?
Well, the thing is, the answer for the longest time has been kick the can down the road.
Yes, until you can't.
Well, I mean, at some point, it's like a Ponzi scheme. It's like at some point, the jig is up.
Well, and that's the big thing. Like people have been talking about the quantitative easing, and it's just sheer market manipulation, buying bonds, selling bonds, manipulating the price at a government level, rather than letting the free market shake out. Because if they were to let the free market shake out, then that might prevent a certain politician from getting reelected. That's why they want to kick it down, right?
They just like, okay, let's just stabilize it, keep it moving. Print more money, print more money.
Don't
At some point, someone will pay in the future. It won't be us.
I heard a quote, or I read a quote the other day, like a politician's first job is to get elected, their second job is to get reelected. And everything else, their job comes far behind those two.
Well, you know what, at the end of the day, and as you know, we're professionals. We're professional real estate investors. So very much like the NHL, every year they change the rules,
Yeah.
right? And professional hockey players show up and play the game within the new rules.
Yeah.
The same win,
Well,
we'll get us all.
Yeah,
You know
we're
what?
gonna do it all. I mean, there's never an excuse. Like,
Yeah.
you can look at the
Yeah.
macro and say, oh, well, that's hard, or it's, it's gonna hurt so many people. And yes, that can be true.
Yeah.
But at the micro level, we're all in control of our actions.
Oh, for
and we
sure.
can all create our own.
And there's always opportunity
There
everywhere.
always is.
You
In
know,
every circumstance.
yeah, we're buying we're buying during recoveries, expansions, or stabilizing declines.
Yeah.
We're buying, like we're investors.
So
Like,
you're
are
buying, yeah.
you an investor or are you like a flipper, right? Like, if the only way you're gonna make money in real estate is that piece of real estate is gonna go up in value,
Yeah.
you're not truly an investor. You know, you're a speculator.
Speculator, absolutely.
Yeah.
Yeah, and that's the on the Bitcoin side of things why I always had trouble with that, because you have to be kind of banking on the value of it going up. Yeah, but with real estate,
And it doesn't have income.
it doesn't have income, right? With real estate, you got the income, right?
Yeah.
I mean, so there's a lot of people who made a ton of money in, let's say, Bitcoin, but you had to speculate on what other people thought it was worth,
Yeah.
and how many other people were going to go buy it to drive your price up.
And you know what? Like, we're still in the best country in the world. You know, I grew up in Latin America, in war-torn El Salvador, and then we had to move to another country, and communist country, Nicaragua. And you know, at one point, you couldn't even buy food, right? And there is no opportunity, zero, right? And so, you know, when you come here, you see all of the opportunities around you, and like a lot of people just, you know, they just go.
Yeah.
They take it for granted.
That's true. Yeah. Yeah. There's still so many ways to be successful here in Canada.
The banking system, it's beautiful. They lend you money on real estate.
That is nice. Yeah, the leverage, right?
They ain't gonna lend you money to buy crypto.
No. I think that the biggest thing with real estate, that's one of the most attractive features, is that you can leverage it at 80%, 75%.
The government, that means that the banking system, they're telling you how much
Confident they are.
and how confident they have over real estate versus
over everything else.
everything else.
Because they don't treat stocks the same way. They will still lend in stocks, but only in certain circumstances. Not nearly as common.
Yeah, you can short stock or whatnot.
Yeah. Or infinite banking, you can borrow against your.
Yeah, no, that's, I mean,
different concepts.
Yeah, different concepts, but at the end of the day, real estate it's true, it's been proven, and for me especially, you know, in the multifamily space, you know, in the apartment building space, what really attracted me, Andrew, was the economy of scale.
Yeah.
This idea that people will always have to live somewhere as long as you have, like, we focus more on affordable living, you know, not you know, low income, but like, you know, in the middle, right? And what happened was, you know, some of the decisions that we've made, we've always made them with that in mind, that Armageddon-proof type business, you know? And so we have doors all across Canada, and when 2020 came, right, everyone was scared. March 2020, like April 1st, Andrew, was Judgment Day for all investors. If you remember, it was
people were scared.
yeah, we didn't know if people were gonna pay their rent. But if you remember, the government gave them just enough to, you know, pay their lodging, buy their food. The government didn't pay, you know, people to live in their luxury condo downtown Toronto, you know what I mean, at $3,500 or $4,500 a month. They give you $2,400 a month and make do.
Yeah.
And so what happened? Well, by the time April 1st came, of course, we took massive action at that time. We were 98% collected.
Yeah.
Right? And then I have people in the space, good friends of mine, you know, with luxury properties, shiny stuff, beautiful stuff. When you look at the stuff, it's like gorgeous.
Yeah.
But they all suffered during those times.
Yeah.
They did well during the good times, but during the bad times, you know, people are not looking for luxury, right? They're not looking for those extras. They're looking for just basic, I want to live here, this is my rent. And we were able to come out of it really in a positive way.
No, that's great to hear, and I agree with you on finding stuff that's recession-proof. I'm always thinking that. When people would ask me, like, what do we do? Like, knowing what's coming, because I was kind of calling this out and predicting this back, you know, a year ago, especially the inflationary problem. And, you know, what do I invest in? What will people always need? That's
housing.
the question to ask.
They will always need
Yeah.
to live somewhere.
Yeah, somewhere.
Right.
They'll always need food. They'll
Yeah.
always need.
Look at the grocery store. They
energy.
make killing.
Yeah, grocery
Yeah.
stores do well. Yeah, so I mean, if you're thinking about things like that, I mean, like, sure, for currency, the gold and silver can be nice, but I mean, if you're hungry, you need a sandwich, not a piece of gold or silver. Right? So
And also, it costs money to store.
yeah,
Right. So the storing fees of gold and silver.
yeah,
Sometimes when I think about it, like this, not only does it not provide income,
yeah.
it's just a place to hold.
It's
the
just
wealth.
insurance.
Yeah,
and
yeah.
it's an expensive insurance in a way because,
Yeah.
like you said, you got to store it. You got to worry about where you're going to put that. Of course, I do like it. I think it's got its place, but it is. You know,
And this is what I know. The economy of scale of an apartment building, all the different profit centers in real estate, you know, at the end of the day, I can't picture myself, you know, getting into any other asset class other than where I'm at right now, you know?
Oh yeah, for sure. And I want to run through like kind of an example of what you look for. What you know,
Yeah.
we take a recent one that you bought and kind of work through the numbers.
So
on that.
my strategy has changed over the past 23 years. So when I started, I was a value add guy. I was like, go in there, you know, roll up my sleeves and you know, turn property around and just, you know, be really, really aggressive, right? 23 years in the game, I've been able to create a really solid portfolio where I was able to take 20% of my portfolio and sell it off in the height of all heights, you know, which has been the past, you know, year, and created a liquidity event. So now I'm moving more towards newer, cleaner, lean and clean, right? Brand new assets, developments, you know, building. And so that's kind of the space that I'm playing in right now. Right here in Ontario, especially with the rent control, you know, there's incentives for new builds. For example, they don't follow the same rent control rules. So they're kind of inflation proof in a way, because if you get hit with inflation where rents are going up, you kind of have that flexibility. Now you are paying a premium, right? You're going to pay a premium. So, like for example, one deal that I just did, which is a 16-unit apartment building at 4.65, right? So we're paying a premium per door, when my average per door historically in my portfolio is about $100,000 a door, right? So I was looking, so back in 2016, 2017, I was going in secondary markets paying like $60,000 to $70,000 a door, and you know, that was kind of my MO, you know, adding value to the property. In this case, you know, 16 is what's the cost per door? We're like close to 3, right? So 4.6 million, 4.65 million, 16 units, brand new. You got an elevator, you know.
You'll just keep the whole building.
Yeah, it's beautiful. It's clean.
Yeah.
It's got a parkade. This one I'm doing now, 60 units, 14.5 million, right?
New builds.
New builds.
Are you buying at like land entitlement stage? Or?
So I'm directly from the builder. So I'm doing both.
Oh, so
right?
Build it.
Right. So right now I have one in a major market that I'm doing a 30 unit.
Yeah.
That we're building. Right. So I'm involved with the building. Now I'm not a builder. I partnered up with a builder to go. You know, we went through the, you know, bringing that lot to site plan approval.
Yeah.
30 units, parkade. You know, in a major market after we're done. So with soft cost, value of the land, construction costs, we're into it for about 10.4 million, and then we'll get after construction value of about 14 and change, and so we'll be able to refi that building and pull out 80% of it.
How many units will that be?
30.
30. Okay.
Yeah. So we got that.
Just a second here. I just want to hit this button.
No worries. Behind the scenes, guys. Behind the scenes.
My other camera blew up, so this one's this is my.
It's good. Yeah. You know what you could do? Yeah, you could have remotes.
Yeah, I don't know how to get that set up, but yeah. Okay,
So then we're doing, so that was that was after, actually buying a few from the builder.
Yeah,
Why I like that, I know I'm paying a premium,
yeah,
but it's, for me, it's the least complicated, it's the path of least resistance. Because, I have my set price, the builder has to actually fill the units for me, so they have to lease it up and they have to lease it up at the number that we've talked about to get the value that we've
Yeah.
talked about.
well, at 30 units at 14 million is 466,000, so these must be some nice units.
Oh, yeah, those are, that one is, but the 60 units at 14.5, what is 230 something?
So you said the 60 at,
Yeah, 60 at 14.5.
okay. Okay, yeah, then you'd be closer to that, yeah, 60, 14,
I think it's about 233 at doors.
241, yeah.
241 door. Yeah, so there is a benefit to new. In 20 years from now, it will still be new.
Yeah.
My insurance loves it,
Yeah,
right? Because right now, with the replacement cost of buildings, insurance companies are scared, right? They're scared to insure something that was built in the 1940s or 1950s. That's where I used to play. That's where I started, buying, properties that were built in the 60s, 70s, and, where I could see the opportunity. And, now we're into like brand new. In 20 years from now, it's going to be new. For the first, year, it comes with fully warranty. Now everything comes with the roof has a warranty, the windows have warranties, the appliances have warranties. It's just like this beautiful honeymoon phase that I'm enjoying right now. And the investors love it. It's brand new. It's a shiny. It's a shiny thing that they can, it's bragging rights.
and where, with these type of properties, are you expecting the cash flow right off the bat?
Okay, so the value adds, which I still do the occasional value add, right? So I'm not completely away, but I'm not gonna go into like something that's so intensive, right? Where you gotta like really turn around all the units or whatever,
So you
because
just turn
I'm an old man, Andrew, I'm 45. I've paid my dues. I've been doing this for 23 years. I've been fighting with the crystal meth heads and the crack heads and and all of these people. And nothing wrong with those people. Nothing wrong with those people. But you know what? I paid my dues. Sword fights, all kind of fights. If I shared all the stories with you, I got scars, Andrew. I got scars.
Wow.
But now I'm going for lean and clean. And so yes, you're right. Little light on the cash flow, right?
Yeah.
But you know what? I'm looking for a different type of clientele. All the people that are investing in a lot of my deals, they're accredited investors. They understand the stock market. It's what it is.
Yeah.
You know what I mean? And it's good and it's not good. Like, how do you even sleep at night? We're living through a time where someone with a tweet can impact that line, So, a lot of the people they're down with that, they're down with crypto, and they're looking for capital preservation, right? Get into a good asset that is going to perform, and if our cash on cash is like 3%, a true 3%. So we're not like playing with numbers here, like this is like 3 or 4% cash on cash. Better than losing 16% or 20% if the money's sitting in the bank account. And so that's kind of a bit of the shift that I've made in my career versus all the value add stuff that I was doing before.
Yeah, it's a little bit more hands off too. If you can just partner with a builder, is the builder an equity partner?
Well, in one of my the one that I'm doing from going through the whole process, that builder is an equity partner. Everything else I'm buying directly from the builder. Yeah, so I have a 24 unit coming up. I have a 44 unit, brand new coming up.
How do you just have a builder that has that, or are these developers that were developing it anyway, you're just taking the whole thing?
Yeah, you know, I love to make connections, relationships, connect with people that are in the space, that are doing real estate, they're building, and people say, well, why would builders sell this? Well, they're builders. They're not investors, right? They want to get in, get out, go to the next thing. Get in, get out, go to the next thing. And there's obviously incentives that were created in the past, 4 years in Ontario that allow builders to make money building apartment buildings versus before. The reason why we're in this situation in the first place is because there was no incentives for people to build. So that's all they did is build condos.
Right.
Once the government puts it in the hands of the entrepreneurs, they will solve this vacancy crisis, right? Yeah, make it so we can make money, right? Give the incentives. You'll see if you give enough incentives, people will build. You'll see, and then you'll create jobs. I mean, there's benefit.
What are some of the incentives that you like right now?
Tax incentives. So you can apply for a tax. I'm trying to remember the name of it. I know it's not going to hit me right now, but for example, we're in this secondary market, and for the first year we have tax break, right? So property tax break.
I've heard this. Welland does something like that as well.
Yeah. So we have a property tax break. So the first year, I think there is no tax. There's no property tax. The second year, and I have to check with my admin how exactly it works. But those tax, the one thing that really takes the cash flow out of a deal is the taxes. And so
just get rid of those.
Yeah, just get rid of them, or make it so it's not as harsh, so people can build. And so there's tax incentives, the rent control. That in itself is the reason why you want to go into new builds.
Then you can just set the price to whatever you want. It used to be 1993, and then wasn't it Doug Ford, or it was right before Doug Ford took office in Ontario that it got updated to 2018, I believe.
I'm not sure if it was Doug. I think Doug.
It was right before Doug, but he didn't undo it.
Okay, good.
That's my understanding of it.
I'm not a political guy, so I don't believe in one party. I believe in efficiency. So make it easy for me to make money, and we will help the economy. We will create jobs, and we will build. We won't have a vacancy crisis.
No, absolutely. If the government just got out of the way, all these problems would be wrong. Or gone. We would be in a good spot.
Well, like it's been proven.
Yeah. Like the free market. Yeah. Because people who have an entrepreneurial mindset, and if they're taught that, you go out and you solve people's problems. Yeah. That's what an entrepreneur does. You go solve people's problems and you make money for doing it.
Rent control, it's actually hurting the people that you're trying to protect.
Absolutely, it does, because now the landlord needs to charge more to all the other tenants to make up for the fact that he's making less off of the ones that are staying in Mobley.
Also, with the landlord-tenant rules, you're trying to protect tenants. You're actually hurting them, in my opinion, right? So I'm just an investor here, but there's some people that you're like, you know what? I would love to take a chance on this person. I know the credit wasn't right, something happened in their life, and I would love to take a chance, but I can't
risk it. Can't risk putting them in my unit because once they're out, I can't get rid of them.
That's it.
Exactly.
The risk is too high, Andrew. Yeah. And so what am I going to do? Right? The only thing I can do is like, okay, I'm sorry. I wish. And so what happens is, a lot of these people are not going to get places anywhere. And this is where you have tent cities. We live in Canada, the most prosperous country in the world, one of them, and we have 10 cities. When we have all of this land, it doesn't make sense. And so, and I know where the heart is. They want to protect tenants. And I'm not a politician, so I'm sure that I'm only speaking from one aspect. But maybe there's other aspects that I'm not looking into.
Yeah, getting elected and getting reelected.
Exactly. So those kind of things that in the market that that led me to new.
Yeah.
You know, I love you, and I'm in a position now that I've been doing this for 23 years. I've built a reputation. You know, I've proven myself, and I've paid my dues.
Yeah. So with these ones here, same type of thing, GPLP structure.
Sometimes they're just simple partnerships, right? Sometimes it's just, you know, get a few of our, you know, some of these deals are not that much, they're not that capital intensive.
Yeah.
You know, but the bigger stuff, yes, you know, like if I'm looking at 100 unit, if I'm looking to take something down that's serious, or we're doing stuff in the US, GPLP, for sure.
Yeah. Now with the U.S. stuff, if you're doing those, I've heard people say it's not. Quentin D'Souza came on and he said, "Oh, it's not as profitable for me to do it in the States." He's like, "Cause up here in Canada, I can do 50-50 with no money in all the time, whereas down there it's harder to do that." Has that been your experience?
I would have to agree, right? But the thing is, I'm not looking for U.S. investors. All my investors are Canadian.
So then it's still works.
Yeah, but and the other thing is, Canadian investors there's such lack in inventory in Canada that they're looking for other options.
Yeah, how can I get this money performing better?
Yeah.
And what do you find that, like, what's the carrot that you need to dangle that makes sense? I mean, whatever you feel comfortable sharing.
You know what? Everyone has different reasons. We are living through different times, so it's really what's happening in the market, you know? Before, you know, and people are like, what about your value add stuff? You know, people love my value add stuff, you know, and it's not like it's going away. Right. It's just you're finding less and less of it, right? Yeah. And I had to retrain my investors. I'm like, guys, if you're just waiting for value add, you know, like, we're not gonna do deals, you know, because it's not like, I'm not gonna jeopardize my 20 plus years in the game and investors' money just to get into something that may not make sense, right? Yeah. And so when I come with my numbers, when I show up, people are like, okay, they trust the numbers because they're all very conservative. And if I could do value add, we'll do it, right? Yeah. But it's not always the case, and so, you know, I'll get people, you know, just the other day, someone's like, I'm not getting your emails anymore. I don't have anything for you. You know, you wanted value add. I think we're going into a buy and hold stage when we just need to preserve the capital, and there's going to be opportunities for value add. Like, you know, when the cap rates start going up, and you know, you start to see, you know, a lot of these mom and pop operations, baby boomers. There's going to be a lot of inventory on the market. This will be a massive opportunity for the value add. Right?
That's actually something I really I'm planning on putting together. Is like a list of people who want to take advantage of that. Like when this comes up, let's have our plan in place ahead of time.
Well, let's do it. Yeah. Because let's call it the baby boomer trust. Yeah. You know, let's create a fund where we're just going out buying all baby boomers assets. You know.
It's happening. It's like it's all over the place right now. People you know, just looking, they're like in their 80s now. They're like, you know, I'm done. I don't need to keep this anymore.
And so those are opportunities, and they will come. You know, before, that's all there was. There was so many, like back in 2016, 2017. You know, the value adds were there everywhere, right? And now they're there, but they're not all. They're not. It's not like, oh my God, this is like a perfect bird, you know. And so, you know, that's what a lot of investors are looking for. But you have to think about one thing: the longer the money sits in your account, or in other underperforming investments, the more you're losing every single time. Yeah. And so, you know what? Look for someone that you can work with that is conservative, that sees the long term, that has a long-term goal, and stick with those people.
And what are your investors expecting? Like, are they expecting to be in for 10 years, 5 years? Like, what is the general idea? Or is it, we're buying it, we're keeping it?
So with the new stuff, it's plain and simple, like, we're keeping this.
So what if they wanted to sell their units or their shares?
Yeah, we have like, obviously, you know, if someone wants to, you know, get bought out, there's no problem. We could do that.
you do like a current evaluation.
Yeah, that's
How do you come up with a current valuation?
Appraisal.
They can just get an appraisal. Okay, so they just have to pay the appraisal kind of thing.
We actually, if someone really wants, like, if they're not in agreement with what the offer would be, we get 2 appraisals, and we'll get
Okay.
take the best of 2, kind of thing.
And how many people, like, give me an example of where you might have like 3 to 5. Would you have 3 to 5 people in a deal, or would it be more like 10 to 50?
It really depends. Like, there's some deals that it attracts people that are really accredited. They have the capital, and I might be able to do it with like 4 people.
Yeah.
Those are my favorite.
Yeah.
Right?
Less people.
I want to work with high net worth accredited investors that are looking to buy really amazing assets that are going to outperform everything over time.
And those are also going to be the people who don't really care too much about the cash flow, so you have the opportunity.
Now there is cash flow,
right?
And it's going to improve over time.
Yeah.
But when you're getting into a new build, and this has been my experience, you're into something where in 20 years from now, it will still be new, right? Versus, buying something in the 70s or 60s, which what I was doing before, but then the roof comes up.
Yeah, you still get your life cycle maintenance, but I guess you're saying your roof is still good after 20 years if it was done right.
Well, I mean, there's time, but if you're buying something that's in the 70s,
you're probably on your 3rd round of life cycle maintenance with the elevators, with even more.
Yeah. So that, there's benefits, and sometimes the projected cash flow on an older product ends up being the same lower cash flow because of all the maintenance that takes place.
Yeah, and I always I'm a stickler on this podcast when we run numbers. I'm like, well, you're forgetting about life cycle maintenance. Oh, our maintenance is nothing. But like, let's picture, roof comes up. There's 10 grand.
Yeah.
I mean, we gotta amortize that.
Yeah.
We gotta plan on that. Furnace goes. Okay, where's your budget for that stuff?
Yeah. So what I love about the new, it's like the honeymoon. You get this honeymoon period.
You're not really needing to do any of that stuff you're gonna start thinking life cycle maybe after 10 years for like minor stuff, and then the big items probably not for 25. And
so now the projected becomes more of a true cash flow.
Yeah, it's true. But like to my point, these accredited high net worth investors, a lot of them don't really need that cash flow. They want to see their nest egg grow.
Yes.
I think the thing that you would probably want to avoid is cash flows.
Then for sure. Yeah. Right. I mean, and then you're definitely avoiding that.
Yeah, there shouldn't be, right? And that's there's an insurance thing, but I mean, then you call insurance. Yeah. Like, so those are your cash flows. Defects on build, you hopefully get the warranty.
For sure. And I have a lot of videos. I do a lot of training on this with a lot of my students, where we talk about new builds. You have to vet the builder.
Yeah, because Terrion's not going to cover you with rental product. But the builder can still honor a warranty.
Yeah. And so you want to make sure that you know the builder, you vetted what they've done, go and look at what they've built before. Fortunately, with this builder that I'm currently working with right now, I was able to see 4 other apartment buildings that were built that someone else bought, and I was able to walk through them, see how fast they were to act, during warranty calls, or how fast did they react? Did they come to the property right away?
Right.
So I was able to do all my due diligence, and that's what I suggest. If someone's going to go down this road, make sure you vet the builder, make sure it's not their first time kind of thing, which is nothing wrong. Maybe there's some good builder, but if it's their first time, like, okay, then we have to look at the property, get a property, do our proper inspections or whatnot.
Yeah, it definitely helps if you can see that track record and know that they have a reputation that they want to maintain.
Yeah.
Of course, you're getting into like larger stuff where I think that they probably want you as a repeat customer too.
Oh, for sure.
Hey, if I do a good job, we're going to buy a couple more from me. That's repeat business.
Another thing that I love is that you get to see the whole process, right? Yeah. You get to see them pour the foundation. You get to see them, frame it. You get to see the inside. You get to see the whole process from scratch.
Yeah.
From like digging, right?
Yeah.
And so a lot of the deals that I have, I have them under contract before even the shovel hits the ground.
So you're just buying the land.
No, I'm basically, so there is times where I buy the land and we build, but the last couple of deals, the deals that I'm talking about is me buying directly from the builder.
Yeah, well, slash developer, so they
Yeah.
already got the
They
land.
did it all, they have it,
Yeah.
and they're like, I have this deal coming up,
Yeah.
these are gonna be the numbers, these
You
are gonna
want
be
it.
the price, and I'm in.
So
Here, last time I'll have to do this.
No worries, no worries, no worries. Look, we got a lot of people on my channel, they got to see.
Yeah.
they got to see you set the camera to us.
Yeah, behind the scenes. It's not just all, magical here with
Yeah.
Andrew Hines.
Yeah, it's a lot of work goes into it. So walk me through a deal like that. So say you might have 4 people that are going to invest in that deal. How would you structure it? At what point are you getting their initial investment?
So a lot of my deals, it depends on the deal structure. If I can make my life easier, I will take less equity. It might be like a 40-60 kind of thing.
So you'll take 40 potentially,
Yeah.
60% split among
Yeah.
say 3 or 4 investors.
Yeah, exactly.
Yeah.
And you don't need to be greedy. You know what I mean? Like if your life is easier,
Yeah.
if you don't have to go try to do a syndication, it just makes things cleaner, easier.
Absolutely.
You know?
Yeah.
I do take an acquisition fee, anywhere between 1 and 1.5%, depending on the deal. We're still gonna do, on a brand new build, we'll still do an inspection, we're still gonna do all our due diligence.
And are you paying, like, what kind of deposit structure you have once it gets rolling?
Yeah, so the deposit that I'm looking from the investors.
No, what do you have to give to the builder?
Okay, so I built a relationship, right?
Yeah.
So, before I was giving like 300,000-400,000, but now we're down to like 20K.
On a total value of what?
Of like, let's say 10 million, 14
So
million.
10 million, which you're not paying until it's done and ready to go.
Yeah.
With that 20K deposit?
Well, the thing is, there's trust, right?
So your developer's getting the financing, he shows the bank that he's got a purchase.
Or the developers already has the money to build.
Yeah.
The developer's already raising the cap, doing
Yeah.
his raise to build.
Oh yeah, they're probably raised
Yeah.
bank construction financing.
Yeah, exactly.
Because they have a buyer.
Yeah.
So they can finance it, they build the cost of that into the deal, you have a set price, like some of the examples you gave me,
Yeah.
Maybe even 460,000 on a door,
Yeah.
which, I mean, if you compare to condo pricing, it's not that much.
No, not that
Yeah.
bad, not that bad. At the end of the day, you have to do the math.
Yeah.
Right? You have to see where you're like, you
Yeah.
gotta see where the costs are gonna be. You obviously have your income, you have your expenses.
Yeah.
You're gonna have your debt service,
Yeah.
and then you have cash flow.
Yeah.
It either works or it doesn't.
Right, you're gonna make sure it works, obviously. Now, at what point are your investors contributing their first bit of money? Like,
Yeah,
because
so I like speed. Like I'd
Yeah.
rather have people set up right from the beginning.
yeah.
I've been doing this for 23 years.
Mm-hmm.
This industry is small. I mean, we just met,
Yeah.
but we know each other,
Yeah.
right? And like the second you mess around here in this industry,
Yeah.
everyone will know.
People find out.
Yeah, people will find out. And so I've been someone that I've always treated people with respect, and people know the types of deals that I bring to the table.
Yeah.
And I attract a certain type of investor that, when they're in. And so what if it's a simple deal, we could do a simple corporate structure, and then a lot of the times a lot of these people have become really good friends of mine. And so it's like, look, we're gonna take this down.
Yeah.
There's other times where I may have to do a raise, and then I gotta get my lawyer to create the GPLP. We
Yeah.
have a memorandum of understanding. We want to make sure that they're accredited. They come in, and on the LP side, then it's a subscription agreement, and so many different ways that I'm doing things.
Yeah.
My favorite is just dealing with a couple people. Hey guys, everyone's gonna kick in 500K, and let's just get this done.
Yeah, so in that regard though, so you're talking to a developer builder who's gonna sell you a product. It's gonna take him 1 to 2 years to build
Yeah.
it. So 2 years. So you're lining people up saying, I don't need anything from you until the 2-year mark when we're gonna buy it. Is that
Well, I want to have their commitment.
You have their commitment,
Yeah,
right?
right.
So you already have their commitment,
Yeah.
you sign on the dotted line.
Yeah.
So in their head, they've committed, but they haven't actually fronted the money yet.
Well, they'll front something.
Some, like a deposit.
Yeah,
Yes.
exactly.
Yeah.
And then, like the people that I deal with, if we've been working for a long time, I know that people know that we're serious, you know?
Yeah.
This is the same way that, the builder that I work with, they can let me control 14.5 million with 20K
Yeah.
because we're serious. Like,
Yeah,
we
you
just
know
buy
our
all these
reputation.
we just buy all these
Yeah.
other, all of everything that you had. So it's like, of course, you're gonna be, you're not gonna be as aggressive with someone that's completely new,
Mm-hmm.
which is another benefit of becoming D.
Yeah.
You see,
Oh,
when you're an
yeah.
A investor, you gotta fight for everything, right? Who are you? You know, but once you become
Yeah.
the Andrew Hines,
Yeah.
you know, then people start working with you in a very different way.
Yeah, I just had this conversation with Jazz Tax Artist just on, and we were just
Yeah.
talking about how, like, you know, people would take my call. Like, you know, like you said, we're in a small community, people know, and it opens up doors kind of being known, right?
Yes.
Becoming the, as you
Yeah.
say, right?
Well, your job after getting known should be getting more known.
Getting more known, getting more known, more trusted,
Yeah,
more liked.
and then because even if you become known,
Yeah,
you can easily become forgotten.
right. You
Easily.
gotta keep repping it.
So you gotta keep getting known. How long have you been doing your show for?
Just over 3 years.
3 years. After the first year, it should be good. Everybody knows you.
Yeah.
But if you would have just took a hiatus for a year, no one would know you. Nobody would even care, right? You'd have to start over.
Yeah, you know, it's done some interesting things. Like, I could have been pushing it a lot harder, a lot faster, but in the last year, we've hit like levels of downloads and, you know, consumption that I never thought we'd get to.
You're like the Joe Rogan of real estate podcasts.
Yeah, and we're really trying to do it with this setup here.
I love it.
Yeah.
You know what? There's nothing better than live. Like
Yeah.
the Zoom podcasts are great.
Yeah.
But like, look at this environment. We could be here. I noticed you didn't have cigars and
Yeah, we don't have any scotch or bourbon, but you know, that is definitely something that would be fun to kind of get to. I try and keep it to an hour, so I don't do the 3-hour Joe Rogan style. But definitely something that would be fun to do.
And so, what made you start?
It was a couple of things. Like, I always would talk about these things with people,
Yeah.
and it kind of gave me an opportunity to, one, like, network with people who are like-minded, build a community in my local area, because I was investing in London. I didn't know anybody out this way, so it really gave me an opportunity to go from zero to I have like a ton of close connections right in this area, in the GTA, and then again, you know, I went off of Kevin O'Leary's statement. He said, "Why am I on TV?" Because nobody anywhere wouldn't take my call. If I called, they'd take my call.
Exactly.
I'm like, well, that'd be ideal, right? So, and then plus my mother-in-law's got her TV show, and I dabbled in TV a little bit, and I saw the power of having a following, and I'm like, okay, I gotta do it, but I'm not gonna pay hundreds of thousands of dollars to have my own TV show. I'll do it, you know, grassroots kind of thing.
Well, when there's something that happens when you enter the status, right? And so, because I've been in this game for 23 years, and then someone on a podcast, they're like, "Oh, you're the godfather of real estate," you know?
Yeah.
And then someone used it again, and then they used it again, and all of a sudden I became the godfather of real estate. And I was like, you know what? I like that. But there's something special that happens to your business when you enter the status, right? You enter the category of one, and people are like, that's the godfather of real estate, you know?
Yeah, absolutely. Well, tell me about the team. Like, who's behind the scenes for you? Because obviously you can't do it all yourself. You're down here talking to me, not, you know, making phone calls. And
Well, the team is important.
Yeah.
You know, without team, you have nothing. You know, the gap, and I always say this to people in a lot of my training, speaking, presentations, it's very clear. From where you are today to where you want to go, whatever your goals are, the gap is always people. Every single time.
Okay.
Right?
That makes sense.
And so you need to leverage people. You need to bring in people that are smarter than you. Shout out to Ed Hervey's, because he's our operations guy in our education company, Wealth Genius. My wife, she does all the operations for all the doors, you know, the 600 doors. And you know, we have an amazing admin person, we have an acquisitions person, we have bookkeepers, you know, we have on-site supers. there's all of these people that make this happen, and no one can do it by themselves, you know?
Exactly. Yeah.
And it's really about finding the people that play at the things that you have to work hard at. I will never be good at
I kind of
paperwork.
like that. That's good.
I will never be good at paperwork. Like, you know, you put paper in front of me, you cripple me.
Yeah.
I lose my, it's like kryptonite, you know, it's like I lose my, I get all weak,
Yeah.
and I'm like, no, don't give me any more paper, right? Like, I'm not that person. Put me in front of people, everyone's signing checks,
Yeah.
right? And they'll love it, right? And so, there's a really powerful book, it's called Rocket Fuel. And I don't know if you've read it.
I haven't, no,
Yeah,
that's
so if your audience is, you know, if they have Audible, you can get it on Audible, you can find it on Amazon. But it really talks about the visionary and the integrator.
Yeah.
Now, I'm a visionary,
Yeah.
and nothing will happen without the integrators.
Yeah.
Nothing. It just becomes a lot of fun and big ideas, but there's no follow through, right?
Yeah, I feel so. I can definitely do some of the books and all that stuff, and you know the integration part. But I feel like for me, that's like you said, paperwork. I don't even like sitting in front of a computer. I'll sit here and discuss. I want to be outside. If it's sunny outside, I kind of want to be out there, as long as it's not as hot as it was yesterday. You know, I want to meet people, talk to people. This is
Put me in front of people.
Yeah.
And whatever you want, we'll get it. Like whatever it is that you're looking for. And so
Yeah.
the idea is with Rocket Fuel is like it's like love languages for entrepreneurs, because you now understand what the visionary's role is,
Yeah.
and if everyone on the team can understand what the visionary's role is, and what the integrators and the visionaries also need to understand the integrators,
Yeah.
then you can build the Fortune 500 company,
Yeah.
right? If everybody understands their role and everyone's there and engaged in activities.
Rocket fuels in it. Okay.
It's pretty interesting.
Yeah, I got to grab that one. I had this thing I was doing a lot of podcasts, so my Audible account, my credits were like maxed out. So I just bought a whole bunch of random books. I wish maybe I bought that one. I'll have to go check.
Yeah, well, it's a good one. It's a good one. But team is important. Bottom line, no one there's no one can do it alone.
Yeah.
Right? And if I was doing it alone, the second you start working in the business, you're not working on the business, you'll never grow. And you end up
That's
being
exactly
mom
it.
and pop. You can't scale the business.
You can't scale, and you'll drive yourself nuts. Like unless you just love it. Like I love working with my hands and never get to.
Yeah.
But you know, with a lot of the stuff in the business, when I found myself doing it, like we just bought a campsite, Airbnb, like glamping thing. And I have a few partners on it, and we all agreed delegate everything. There is nothing that we do. Like, we don't do anything other than delegate.
Yeah.
And you know, we came up with the idea, the concepts, but we can't be doing this X, Y, and Z.
Yeah.
That has to be a mandate, otherwise we'll lose our minds.
Well, thank God I was, I have no skills in any renovations. I mean, like you see my hands. I don't know. The people at home can't see it, but if you see, I don't have any calluses on my hands. Like my hands, I actually have to report to the museum very soon because they want to showcase my hands, how soft they are. You know, but at the end of the day, it's not for me.
Right.
But I do appreciate the people that can work with their hands. You know, I do appreciate those people.
It's just not the highest paid skill. Although I will say, trades are a good time. Trades are doing well. I mean, compared to the other white collar jobs.
Yeah.
But I mean,
Take care of your trades.
Yeah, being the one who creates the idea, the visionary gets paid the most.
Yes.
In salespeople.
Yeah.
The visionary who can sell.
Get people to sign checks.
Yeah, get people to sign checks. That's the big one, right? And it's not hard to, you're enthusiastic, you've got the brand, the awareness, and those things all come together help grow the big.
You don't want me there with a hammer. Actually, you want to get hammers out of my hands. I'll hurt myself.
There you go. Yeah, man, time has flown by on this one.
Andrew, you're a really good interviewer. I have to tell you, I'm having a good time here.
Yeah.
Thank you. You know, like you've obviously mastered this craft, which is podcasting. You know,
the craft of just saying whatever comes into my head.
Yeah, well, it's good. You know what? At the end of the day, it's not easy, right? I was telling you, I was on live television for many years, and for the most part, it's easy until you get that one person that just gives you the one
The one word answers.
One word answers, yeah. That's
Yeah.
good. And
It's, fortunately, I haven't had too much of that.
Yeah.
Most of who I've had on the podcast has been, I was aware of them and wanted them to come on. I do occasionally say yes to somebody who asks me to be on, but I usually get way too many of those offers to even read.
Yeah,
So
yeah.
it's just like, okay, well, I can't.
Yeah.
Yeah, been very fortunate on that front. I would say the closest to it, it's funny because Matt Piche is like, yeah, everyone who interviews me, like, we're done so fast, they're so surprised. But I managed to get an over an hour interview out of him. So
Nice. No, you know what? You do a good job. Like, did you picture yourself here doing this with what you're doing ever? Like,
no, probably not. But I used to teach at Western, and that gave me the confidence to know I could maintain attention of a room. My dad was a high school teacher, so I knew he could tell stories and he kept people engaged. I didn't think I got any of that from him, but then when I taught, it was like I went through extreme nervousness, but then once I just kind of let go of all my insecurities, I was just cool to just stand there and talk about what I knew.
were you insecure?
I definitely was, yeah. When I
Me
started,
too.
yeah, I did really badly on my first teacher evaluations. It was like the summer intercession, and I was the first of 3 teachers who was being trained. So I'm like, first up, still 21 years old, and teaching a class. I had 40 some odd year old lady in the class. I'm like, how am I teaching this lady? So I was really nervous. And it wasn't until the second week where I hit my stride, but it was only a 2-week intercession for my teaching. So when I did that, yeah, it didn't go well, but I took that and I'm like, you know what, I just need, hey, I've hit rock bottom. It wasn't really rock bottom, but for me it was a real gut punch. Didn't go well. And I'm like, I can only improve from here. And that was that.
What about high school?
I liked debating.
Yeah,
But I never did like much about high school other than I got to debate.
Look, high school was extremely, had low confidence, insecure. A little bit about my story is, I dropped out of high school at 15, ended up leaving home at 15, living on the streets, and I was down and out. And if someone would have tapped me on the shoulder and said, Alfonso, one day you'll be this person that everyone wants to listen to, and on stages and on podcasts, I would say, no, you're lying to me. But the truth is, anybody can transform. Anybody that has low confidence, if someone's an investor right now and they're like, man, geez, these guys, it's the Andrew Hines, and you got the godfather of real estate. It's easy for those guys to raise capital or be in real estate. Anybody can develop the skills to get up in front of a group of people and share their story and present. A mentor told me a very long time ago that the most powerful and the most valuable piece of real estate is not the buildings, it's actually the stage.
Yeah.
From stage, people have changed minds. From stage, people have created wars. From stage, people have stopped wars, inspired nations. Martin Luther King, I have a dream.
Yeah.
And so once you can control the stage, once you learn how, it's a learnable skill, and it does take time to develop, your way around the stage and being able to communicate on a podcast and just share stories. But once you can master that, the person on the stage will always get the business, will always get the checks, will always get the girl, will always get the promotion, will always get the raise.
Yeah. It's funny you say that because I would intentionally accept opportunities to put myself in front of people because I felt a little nervous too. Yeah, it's interesting conversation. Yeah, so I played in a band and did all that stuff.
Did?
Even though it was out of my comfort zone.
Wow.
Totally nervous.
Wow.
Yeah.
What did you play?
Guitar and sing.
Oh, you sung. You're singing. You're a singer. You sing.
Yeah.
I had no confidence for that. By the way, no one wants to hear me sing. But
I wouldn't say I did either, but it's just I wanted to do it.
No, I mean, I can see that you do have you do look like some sort of a rock star or something. But it's just confidence in the second you start creating your own platform like the podcast or getting on stage or presenting or getting in front of people. you start transforming into the,
Yeah, for
right?
sure.
Because you're the go-to person.
Yeah, you become the brand, and
Yeah.
that was the hardest thing. Like, you know, when I started in the mortgage business way back when, it was like I had to create a brand around me. You know, because you don't want to be a commodity, right? Like that's the difference. Like, you don't want to be just a mortgage agent or broker or a realtor. You want to be the guy.
Yeah.
You know, whoever it is.
Yeah.
And obviously, yeah, that's what you've worked towards doing. And I think that anyone like you know, Gary Vee teaches the same concept. You know, you build a brand around yourself, give away value, and then good things come.
Attraction. We
Yeah.
don't look for investors. We attract them.
Absolutely. That's a great lesson. So, Alfonso, where do people find you? Or follow
Listen,
you?
if you can't find me, guys, what am I looking here? Over here?
Yeah.
Over here, there's all these cameras.
Look
Look
at
over
which
here.
one you want.
Look, you're on my YouTube channel right over here. But look, if you can't find me, shame on me.
Yeah.
Because I'm on TikTok. I'm on TikTok doing this stuff here. You know, like,
Yeah. So you can dance.
yeah, I can dance. You know, I'm not thinking about ultimately. You know, and you know, I'm on TikTok, Snapchat, Instagram, LinkedIn, Twitter, Facebook. Look me up, Alfonso Quadra, and if you can, at the very least, subscribe to my YouTube channel.
Sure.
Hit the bell to get notified the next time I'm doing a video, and smash the like button. I'm just joking, but you know, I'm out there. I'm
Yeah.
there to share my experience. I'm there to give value. I'm always coming from a position of service. I want to make sure I can help as many people as possible.
Awesome. Well, I appreciate you sharing your strategy, the high level look at what you do, because it's something that I think is a big level up. It's something that people want to know about. How do I take it to the next level? And what you're doing is exactly that. So,
Thank you, sir.
anything you would want to share as our closing thought?
Listen, in the end, it's all about the person you're becoming, right? So people talk about goals, targets, and we have goals. We have massive goals, and we're taking massive action. But it's not the goals. It's really about the journey and the person you're becoming on the way to getting those goals.
Yeah.
If you asked me 30 years ago if I could ever see myself here, I would say that would be virtually impossible.
Yeah.
And so what I always stress to my students and all the trainings and speaking when I'm speaking on stage is you are becoming something. Success is what you attract by the person you become.
Mm-hmm.
And you're transforming into the more you transform into the, if you keep that in mind,
Yeah.
you know, the podcast, the speaking opportunities, getting in front of people, you know, singing in a band, whatever it is that you want to do to get out there in front of people so you become a magnet, an attractor, and that is becoming. And so that's what I want to leave your audience with. It's like, listen, you know, I built a business from scratch. I was living on the streets, and I was able to build a massive multi-million-dollar business portfolio across Canada and the US. If I can do it,
Yeah.
anyone can do it.
Yeah, love that. Okay, well, that's a great note to end on. Thanks again for making the trip down.
All right, Andrew, we did it.
Yeah.
Comment down below what you think of Andrew Hines, the Andrew Hines here. How was the interview?
Oh, it was great. Yeah, you make it easy.
All right. Let me see what our people are saying here.
Yeah.
Let me see here. All right, look at you guys. All right. Look at this. 68 minutes.
Awesome.
Tell me a little bit more about yourself, Andrew. What do we not know? Tell me what we don't know.
Okay, so real estate investor. I've been doing this since 2011 and podcasting since 2019. You know, started in London, student rentals, got into construction.
Oh, so you were doing student rentals and
Yeah.
got into
Yeah,
okay, good.
construction, building my own stuff, renovating, kind of doing the burrs. I stumbled into that before burrs were a thing, and kept going. Bought in the U.S. a couple of times. Tried my hand at development. I'm back in the U.S. buying stuff in Florida, and new construction down there, and yeah, just kind of doing everything in between. I got a campsite for anybody who's interested. We do
Where's that?
glamping.
Where's the campsite?
Just south of Tobermory, so we do glamping up there. So search Miller Lake on Airbnb, and
Cool.
you'll see our glamping tents, which are pretty cool. We just launched them, and the reservations are filling up. So anybody interested in a little getaway?
Yeah,
jump on
and
it.
do you have yurts?
Yeah, so we don't call them yurts. They're like prospector tents, but like you gotta-
Prospector?
yeah, so they're like 16-foot wide tent,
Mhm.
queen bed. We've got
Oh,
like
wow.
a boho style, a nautical style. They're really well done. We've got a great team up there that have put them together.
Nice,
for us.
nice. And a lot of people, you know, with the staycation That's a perfect market
Yeah.
to be in, right?
Well, we're hoping, thinking like, with kind of recession pending, we're hoping that we're going to get the people who would have gone overseas, they can just travel local.
Yeah,
I mean, we're actually among the most affordable stays with our glamping tents. We've got on the way. So it's just like something fun and, new.
What are the numbers? So if people want to get into like campgrounds,
Yeah.
so like, the cottage type of, the short-term rentals, like, and I'm asking pure from, curiosity, because that's not my place. So what should they look for? What are three things that they should like follow?
Like if you're thinking camps or if you're thinking.
If you're thinking about doing short-term rentals, like you're doing like the campground, like the specialty stuff, because anybody can do an Airbnb, but you're doing like kind of an experience.
Yeah, you gotta go experience. Like the main thing is you can't do what the mom and pop that owned it before you did, because they sold it at a price that won't work.
Yeah.
And that's exactly our case. Like we had to be creative.
Yeah.
So taking the campground and going from regular camping and trailer stays to getting away from seasonals, going towards a glamping experience. We bought a whole bunch of the trailers. A lot of the seasonals that left sold us their trailers.
Cool.
So we're now like fixing them up, and they're going to be rental product.
Yeah.
At $250, $300 a night on the trailers. The tents.
$300 a night, and that's like during the summer.
Yeah.
Peak season.
Yeah, so we've got 70 sites on our campground, and we're doing our best to really take advantage of July and August and September. Those are the prime months that campgrounds operate, and we'll find ways to monetize a little bit in the shoulder seasons as well. And of course, winter we're closed. So that's one thing you got to keep in mind. It's you make your money in the summer.
So 6 months should cover for the whole year plus profit.
That's the idea, yeah. Our first year, a ton of work, ton of investment in terms of like getting things up. Like our glamping tents, they're actually pretty spectacular. We've got over 10,000.
So what's the website? Do you have a website?
Yeah,
I'm gonna check it out.
Yeah,
It sounds interesting.
So our main camp is mapleridgecamp.ca, and if you want to just go on Airbnb and search Miller Lake, Ontario, you'll find our camp listings for Airbnb.
Okay.
It's under Grotto Getaway.
Grotto Getaway. All right.
Yeah.
Well, Andrew, thank you for having me here.
Yeah, thanks for coming on.
It was fun. We're gonna say bye to our guys. You see behind the scenes. This is a real studio. This is like Joe Rogan. This is like real estate's Joe Rogan. Alfonso loves you. We'll see you at the top.